All right.
I think it was recording already, Fabio.
All right. Perfect then. Okay. Thank you. Good morning, everybody. Thank you for joining us to today's webinar. The topic for today is preparing for a successful commercial loan. This is part of a series of commercial real estate webinars that we have put together with the help of our very good friend Luis Olvera, and we've been doing this for quite some time, and every time we bring new topics in terms of commercial loans. We would like, as a chamber, we would like our members and business owners to be ready. We would like them to have all the information available in terms of how to prepare and be ready to buy, to rent, even to sell if they have commercial properties. So again, this is part of a bigger series. Please keep an eye on our calendar so you can see what other webinars will be coming up in the next month or two. Today, we have a very, very special guest expert who will be bringing some expertise, some knowledge about how to get really ready and become as the presentation says, become lender ready. Make sure that you have all the information needed whenever you need to go to a financial institution and have that first step in terms of buying your own property, right? Or any kind of loans. So with that, I'm just gonna read really quick a little bit about Natalie Schultz, who is our special guest today. She is a business relationship manager at the Associated Bank with over a decade of banking experience. Natalie partners with mid-sized companies prioritizing a relationship-first approach. Natalie focuses on community education by recently becoming a SCORE mentor in Burnsville. So Natalie, welcome. Thank you for helping us today with this very important topic. So I like you to just, take the microphone and go continue with your presentation. You're
Great.
welcome to today.
Thank you very much for having me, both of you. Today, I just want to talk about what my process is, so everyone has a good understanding of how we come to the decisions we make at the bank, and especially since if anyone has ever gone through a personal home mortgage, the stress, the excitement, all of those emotions that come with it, that's the same type of emotions that you're going to have when you're going through your business lending, because your business is your priority, and getting financing, becoming ready, and understanding the process, and the frustrations and the challenges and all of the underwriting that goes along with it is very exciting and stressful all at the same time. So I hope that today, going through this slide, I give some answers and maybe some anticipated questions. So every time that I am on a slide, I do have the notes pulled up here so I can see if there's any questions throughout the course. If you have questions, please just put them in the chat and I'll answer them as soon as I can see them, okay? All right, so becoming lender ready today, we are going to focus on what factors that influence lenders' decisions. So I am in the business of mitigating risk to the bank. So the bank looks at businesses as a lifetime cycle or business operating cycle. Businesses operating has Did someone post a question?
No, that sound is
Okay,
somebody's
that's
coming
just the thing.
in.
Somebody
Okay,
just came in. Yeah.
okay, perfect. So, the items that the bank will look at are a few things of industry type, business life cycle, operating cycle. How long does it take for a business to get funding at the end of preparation? So if, for instance, if you are a company that is glass repair company, By the time you order your glass to replace a windshield in a car, how long does it take for that business to get paid? From purchase of that piece of glass to payment from your customer. So those are the types of things that the bank will look at. We will also ask you for a business financial package that we are going to go over on the next slide. Guarantors on a business and business credit scores we are going to go over. And some guarantors, we look at borrowing for your debt to income ratios. Those are also very important. The strength of your personal assets. And we're going to go over the 5 C's of credit. We'll also look at collateral. What does that mean to the bank? And also, we're going to touch briefly on SBA. Please follow us for September. We will have a specific SBA, getting ready for an SBA business acquisition and or expansion of the business, which is what we specialize in at Associated Bank. Business owners and management, and business relationship strength. So understanding your business credit score and your personal credit score. So personal credit score, FICO ranges between 300 and 850. So there is always a minimum that you have to have required for a bank, and each bank is a little bit different. The common minimum personal credit score is between 660 and 680. So I've worked at a few other banks that the minimum score was 660, and I've worked at a bank that minimum score was 680 on the personal side. SBA also has their own minimum credit score that we need to be aware of. So we need to keep factors. There's plenty of sites out there. I personally use the Experian app to monitor my credit score to make sure that I am getting notified anytime something affects my personal credit score. We also look at payment history. What is your credit utilization? A lot of times it's very important to make sure that you keep your personal debt, and your business debt. So keeping those separated. With a small business, I know that at times when you're using personal funds to inject equity into your business, there's great business tax strategists and CPAs and accountants out there that can give you the best advice on how to do that to make sure you're keeping your personal and business separate. So tips for monitoring your credit. Again, I use that Experian app to make sure that number one, fraud is alive and well these days. We see a lot of fraud on the business side and personal side. Having something monitoring and alerting you is key to keeping your personal credit score intact and your character intact, which we will go over in a few slides. So business credit report. There is such a thing as a business credit report. Associated Bank pulls what is called a Troy report that is not listed here. A Troy report will give us a report on the business, what type of lending that they have at other financial institutions. Also, if there has been any reports legally for a business owner. For instance, if you have an employee that you maybe let go or they walked off the job, they left some personal items at place of business, they never came to pick them up, and they file a report or a judgment against your business saying that your business never returned your personal belongings. That can actually show up as a complaint on your business Troy report and or your Dun & Bradstreet. So those are the types of things that the bank can look at along with a UCC filing for your business to find out what type of lending you have someplace. Do you have any judgments against your business? Those are the few factors. And if you want education on building a business credit report, there are people in my network that I have. You can reach out to me after this webinar. I can connect you with someone who can help you build that business credit report appropriately to get financing. understanding your 5 C's of credit. These are very important when it comes to making credit decisions on a business side. So here's a few things that we look at. Capacity. What is the business owner's capacity to repay their debt? So we will look at the big picture. What do you have on your personal side? Do you have any investments? Do you have any savings accounts? What is the business cash flow? Is the business able to support the debt that they want to take on? So we take a look at, we always collect a business debt schedule. So when we collect that, we take a look at the net income and we look at the debt. We always make sure that we're not putting you in a position that your business is downloaded and cannot expand, because that's everyone's goal as a business owner, is to expand and be able to retain their employees and pay their employees. So it's very important to not to overextend a business. And character. Character is one of the things that we will look at, and that ties into your credit report. So going over your business credit report, your personal credit report, what is the long-term history, right? So we can look at the credit report and say, okay, this person has always paid their debt. They're amazing. Even if there's downturn in the economics, the banks always are paid first. So those are a few things that the bank will look at. The ability for you to make your debtors first. So there are other items such as collateral. Collateral is a huge part of what the bank looks at, because what would happen if you're a transportation company and you have 30 trucks? So if that industry goes bad, the bank is going to say, okay, what can we resell those trucks at to pay off the amount the business owes? So that is where you're going to see your collateral when they talk about loan to value. We always want a down payment. A down payment sometimes is 10%, sometimes it's 20. I've even seen it at as high as 25%. Now, every bank is different. Every bank has a different loan policy that they have to follow, whether it's commercial real estate, equipment, they have certain guidelines. So that's why maybe if you were to contact me and say, hey, I want to buy this commercial building, I am going to give you a term sheet on based on what I think a down payment should be, what interest rate we can obtain. And you might contact another bank and they would have a completely different down payment because they have to follow their specific loan policy. And it also ties into the bank and what their appetite is for that specific industry. A lot of times you're going to see different down payments based on industry cycle as well. So currently, if you're looking at an investment properties are high risk right now because rent rolls have not caught up with the high interest rates. So if you are looking at a multi-housing currently, you might have to put as much down as 30% because that is what it's going to take to get those numbers to work. So it all depends. That's why you're going to see a little bit of different answers and inconsistencies in each loan that you're requesting. So not one loan is the same. It will all be different. So just keep that in mind when you're going to talk to a lender. Capital. So what kind of skin in the game do you have? Your personal investments, your personal resources. So a lot of times you're going to see if the business has a little bit of short revenue, we can pull in personal assets. So you might have a banker that says, okay, I can do this loan, but I want to take your 401k or your life insurance policy that has a cash value as collateral along with your equipment because revenues are down. So it's all a little bit different. What kind of unique ways can we get the lending done for you. So we look at the big picture on everything we do. Conditions are economic related. So the condition of the industry, every industry, and I will tell you the last 5 years, I haven't seen anything like it. The last 5 years of what business owners have gone through with COVID, then business owners are going through tariffs, high interest rates. All of these factors are considered when making a lending decision. So industry trends, if your business is seasonal. So those are the things that conditions that we look at. How are we going to help you the best that we can based on what economic challenges you're having and understanding the story of your business. So there is a financial piece, of course, but there's also a story on your business. Maybe your business is seasonal and we need to look at your income a little bit differently. Or maybe the industry, transportation industry has been hit pretty hard in 2023. So looking the industry, where it trend down and where it's trending back up. So those are some things that we look at as well, so that you can keep that in mind. All right. Quick tip for you, strong business credit can lead to lower financing costs, better credit terms, and supply and lower insurance premiums. So please keep that in mind, keeping your credit score intact, keeping the bank repaid, building that relationship. When I say I'm a relationship banker, I focus on relationships. Sometimes when you are new to a bank, you have covenants that you have to follow that may be quarterly, they may be monthly. What that means is we're building a relationship to identify your character as a business owner, making sure that the bank is repaid. So if you follow these 5 C's, the faster you will receive lending. So it's very important to make sure that you're following all of these. Okay. All right. So here are some items that a bank will typically ask for. So let's take a look at this. So income statements, P&L, year to date, or prior year. So sometimes when I look at a business, I say, okay, what is their industry? What is their operating cycle? Are they seasonal? Okay, so that's going to be really important, and especially in contracting and construction or government contracts. So if I take a look at a business owner's P&L and balance sheet, if they are seasonal and it is March, and they're not doing very well. Well, that could be because we're not looking at the trailing 12 and we're looking at just the year to date. So it's always important to make sure that we understand the business trends, because if we go year to date on a seasonal business or a business, for example, an excavating company that works for counties and cities, typically will be paid at the end of a completion of their contract. And most of the time, construction will all get paid third and fourth quarter. So if you take a year-to-date P&L and balance sheet and you're trying to base your decision off of year-to-date numbers, it's the cash flow and the revenues are not going to be there because we didn't take the trailing 12. So please make sure that when you are visiting with a lender, the lender understands your operating cycle as a business, because they are all different. Every single industry is different. They get paid differently, working with government and or insurance companies. Tax returns. Typical tax returns is about 2 years. SBA is 3 years. Some banks will also ask for a 3-year because of industry trends. Remember when we talked about the conditions? Well, like I said, in the last 5 years, in 2023, I have seen so many industries that from 22 to 23, there was a trend downward, right? What does that mean? Well, as the industry and our economy was overstimulated in 21 and 22, of course, there's going to be a downturn, right? So if that downturn in 2023, is your business stabilizing from 2023, or are your revenues going back up from what they were in 2022? So those are the things that we look at when we look at the tax returns. And if we ask for an additional tax return, it's because we're trying to tell the story of, your business, the business was doing amazing. The downturn of the high interest rate impacted your business, and now you're leveling out. So there's always a reason for the additional, financials we may ask for, because we're trying to tell that story for you, as a business owner, to make sure that you get the financing that you need. Personal financial statements. I cannot tell you how important that the personal financial statement is. A personal financial statement, when filled out correctly, gives a lender an overall picture of all of your assets. So if you have a life insurance policy with a cash value, make sure you're putting that in your personal financial statement, because it is important. If you have 401k or retirement funds, Roth IRAs, make sure you're putting that in your personal financial statement, because we want to make sure we have the correct net worth of your business and you personally, to make sure we've got that big picture. A lot of times, if a personal financial statement is left blank, the bank will look at it and say, oh, this person has no personal assets. That will tie into a personal guarantee that we're going to talk about later. 3 to 6 months bank statements. Sometimes the bank will ask for that. There is specific loan options that Associated Bank has in our small business section that will offer lending based on your 3 to 6 months bank statements. And then your business debt schedule. As I said before, the bank can pull a UCC filing that will allow us to see what debt you have at other financial institutions. The debt schedule is really going to show us what payments you're paying to make sure we calculate your debt to income correctly for that business. So other things to consider here, collateral, of course, industry expertise and knowledge. And, sometimes it's good to provide a lender, if it's a new relationship and this is a new bank you're working with, it's sometimes good to just write a little blurb about your industry expertise. If you have 20 years experience in that industry, that's very beneficial for the lender to know that, because of your experience and knowledge. Okay. So action plan. So understanding an underwriter. So once the banker collects all of that financial information, I will work with an underwriter to analyze all the numbers. I'll write up a nice background. So that's kind of where that experience and knowledge comes from. I'll write a nice background of the business saying this owner has 20 years experience in this industry. They know the industry well. They have gone through struggles in the economic challenges and the business has gone through. So that gives an overall character explanation of that business owner. So it's very important when you receive questions from a lender. And a lot of times when we get the financial package and we do the first initial meeting and we get to the underwriter, we're going to really dig through those numbers and say, okay, there was, this number here. Let's dig into this number and find out what it is to make sure that we understand the business correctly as the owner does. So it's really a partnership, making sure everyone understands everything. So it's important to answer those questions from an underwriter. So review sources and types of financing is another thing that the bank and the underwriter will look for as well. So what is the purpose of the funding and the loan? For instance, we certainly do not want to take a piece of equipment and put that on a business line of credit, because a business line of credit is solely used for short-term lending options. Long-term lending is for term notes. So if you have something that you know you're not going to pay off for 3 to 5 years, short term, you can put it on your line of credit, but then long term, we need to refinance that out and figure out collateral for that. So making sure we understand the purpose of the funding for your business is very important, because if you're put in a long-term note or a long-term product when you should be in a short-term product, that can be harmful to your business. So we really want to make sure that we understand the business. If you have a new business that you're starting, there are sometimes required to have a business plan, review and prepare business financials, so projections, things like that, that the lender will ask for if this is a newer company. So like I said, every business loan is different. Every business is different. Every single item that we ask for is going to be different based on what the business is, the industry type, and where you are at financially, whether you are in the startup stage, whether you are in the expansion stage of your business, or you're in the mature stage of your business and maybe looking at an exit strategy plan to sell your business at some point. So those are the 3 stages of the business that we will look at when we're speaking with an underwriter and really learning how we can best help your business. So once you have all of that information, it's best to schedule an appointment with your business banker and find out your options. Like I said, every bank is different. So we went over the short-term and long-term debt. Working capital is essentially used when we're doing some SBA product lending. Having a good purpose makes the application a lot stronger, making sure we understand what you're using those funds for. How much do I actually need and for how long? So that is huge. So when we look at your business, we start off with, okay, this equipment is 300,000. So you have to put your down payment, and that is going to be your end term. Working capital would be your line of credit. What does your payroll expenses look like? How are you getting paid by your contractors? What do you need for your operating cycle? And that's the dollar amount we really need to dig into on your line of credit as a business owner to make sure you're not overextending yourself, but you're also being able to make sure that your employees are getting paid and you're making insurance payments and all of those things until you're waiting for your contracts to be paid in full. So those are a few things that we talk about in the operating cycle. Also, we look for cash flow and making sure that your business income supports the dollar amount on your line of credit. So it's quite a few factors of things that we look at when we're looking at the purpose of lending, whether it's going to be short-term or long-term, and making sure you're in the right products for your operating cycle and what your business needs to make sure it keeps running. So there are a few things that we look at as far as when we talked about capital for injecting of personal funds into the business. And this is really when we're looking at maybe those smaller businesses that are looking to expand or startup businesses. How are you going to start the business? Are you going to use investors? Are you going to self-fund the startup of your business? Or you can use SBA and or microfinancing. Microfinancing, if you are looking at starting up a business, there is options out there for you. There's tons of options through different lenders. If you have a business that is starting, please message me at the end of this webinar. I can connect you with some microfinancing lenders. I have a very large network of finance partners that I will direct you in the right direction to make sure you're getting the best financing that your business needs, whether it's startup, expansion, or a mature business. Common types of bank financing, we went through all of those, such as the line of credit, installment, commercial real estate, and looking at interest rates. So what is a typical interest rate for a line of credit? Typical line of credit is prime rate. You can always look at prime rate on the internet to find out what today's prime rate is, and then add either 2% or 2.5% on that. Then you're going to get your interest rate on, and a good idea. If you're trying to figure this out yourself, those are the things that I would like to use. If you are looking for a commercial loan and you're don't want to contact a banker yet, you just kind of want to run some numbers by yourself, you can always go to the Des Moines Bank of Iowa and look at that 5-year index to find out what the interest rate is. And again, do a 2% over or 2.5. So line of credit, please make sure you understand that a line of credit interest rate is a variable rate. Prime plus 2 at variable means that when the feds raise rates, your interest rate will rise. When they drop rates, your interest rate will go lower. A fixed term loan, of course, that's fixed for 5, 7, 10 years, depending on what type of loan product that we find best suitable for you. SBA loans are a little bit different. If you're purchasing a commercial building, we can utilize the SBA 7A and 504 loans. The great thing about SBA when acquiring a business is the lower down payment. So that lower down payment is about 10%. Now, if it is a specialty industry, please keep in mind that the SBA can require up to 20% of a down payment at certain times, depending on what industry it is. So they'll look at that as a risk based and find out if it's a high risk industry, you might have to put up to 20% down, even with that SBA note. And we are going to go over SBA in great detail with the new changes that came out June 1st of 2025 in our next lender presentation. I believe we already went over this. I do apologize for the second slide. And there are a few things that we wanted to talk about as what happens when the bottom falls out of your business, right? So what happens when your business isn't doing well, you have loans at the bank and the banker's calling you. What do you do? The best thing to do for a business that is going through some struggles is to communicate with your banker. There are a lot of times a business owner does not realize that when they take out a loan with the bank on the business side, they sign a personal guarantee. What that means is if your business fails, or another concern that Luis brought to my attention was what happens if I'm deported and my business is running? Well, there are a few things that'll happen. The bankers will start calling you. If communication is key, if there is a chance that your business will fail, it will essentially go to a special loans group or a workout group. If that happens, the bank will always try to accommodate a loan agreement that works best for you. So if you have a $100,000 line of credit and your business is failing or you are deported and someone is here on that loan and they don't have the ability to repay that loan because they lost your income, well, we can work out an agreement between the two of you and say, okay, well, $100,000, what is the best payment that we know you can make the bank so the bank can get repaid? We can do it over a 5-year or a 10-year, and that's something that can be worked out. And a new loan can be made in agreement to make sure the bank is being paid. If you go to the loan group, the workout group, the special lending group, and you make an agreement and that fails, that is when the bank will start to come after your personal assets. Personal assets are on that little sheet of paper, on that personal guarantee that a business owner signs when completing a commercial loan with the bank. The personal guarantee, a lot of times business owners do not know that that's in their loan package. Personal guarantee states that the bank can take over your house. They can sell your house for repayment. That is also in the SBA loan agreement as well. So if you are getting an SBA note and you sign a personal agreement, the SBA will not pay the bank their money back with that government guarantee until all of your personal assets are sold and used to repay the bank. So it's very important to understand what type of personal guarantee you're signing. What are the limitations on that personal guarantee? Because a lot of business owners do not know you can actually suggest, well, I want my personal guarantee to only be for the amount of money I borrowed. So there's different types. There's limited and unlimited personal guarantees that you can communicate with your banker on to make sure you understand exactly what you're signing. And you can also have legal counsel as well. I just want to switch quick to another slide here, Luis, if you want to just bear with me. If you wouldn't mind, Luis, would you mind chiming in and going through your presentation while I grab my other slides?
Yes, Fabio, can you give me a share option?
Yes, I can. You already have that, Luis.
Yeah, it says allowed.
Yeah.
Okay, here we go. Here is my presentation, Natalie.
I can see it. So who can help with soft loans, grants, commercial loans, 2% loans, owner and opportunity funds? So 2% loans are, always check with your city and state, your county that you live in. A lot of times the city of Minneapolis has 2% loans. There's also loan funding through those micro loans or neighborhood funding programs that offer 2% loan. Small business loan owner can use that 2% loan for improvement on buildings. So if your building is zoned in a certain area, a lot of times those funding or grant funding can be utilized through the Minnesota Chamber of Commerce. Minnesota Chamber of Commerce allows businesses to apply for free grant funding for commercial buildings to fix their energy sources. So HVAC, furnace, anything in that nature, there's grant funding out there for. If there's a specific grant that you're looking for, contact your city and they can point you in the right direction on where to get that. And also participating in the banks that participate in those city loans. We work with PACE programs that the bank will carry a portion of the loan and the city will carry a portion of the loan. So there's a lot of opportunity out there for you to work with your cities to build up their city. And that's what they're really looking for, is reinvesting in their own community. And that's a lot of those economic development grants that you can find in your city. There's also Women's Venture. Women's Venture has a lot of options that you can look into, and we can provide those websites. If you want to contact me separately, I can provide all of that information for you based on what city and what type of grant funding you're looking for. There's a lot out there, guys. So always check for whatever grants you can receive through city and Minnesota Chamber Women's Venture before financing as well. So the lending partnership between Minneapolis and Associated Bank with the 2%, if you're renovating or making improvements to a building in Minneapolis, we partner with the city of Minneapolis. They will give you a loan for 2% for up to $75,000. Then Associated Bank will do another loan side by side with that loan for whatever the remaining amount is at a higher interest rate, making sure that the improvements you're doing is keeping this affordable for business owners. Origination fee is different for each loan as well. So depending on what the bank charges and what that micro lender charges, it's going to be two different origination fees. So right now, Associated Bank has a pretty low origination fee on owner-occupied commercial real estate. We have some funds that we want to disperse in 2025, so we're offering discounts for new owner-occupied commercial real estate buildings. So that is what you're going to find is different at every bank as well. What fees does that bank charge? When you go to your lender, please make sure that you're understanding all the fees and third-party fees that you're going to be paying at closing time with that loan. So the commercial loan and purpose, you can fill funding gaps using these government grant fundings, which is fantastic. Gap funding, if there is a shortfall of collateral, if there's a shortfall of income, we really want to make sure that we're utilizing some of these resources out there to make sure you get the funding you need to keep expanding your businesses. Okay, since 2020, the fund has covered 5% to 33 max. So a lot of these terms are different when you're working with the cities. So this is one example of what the city of Minneapolis can provide if you're utilizing some funding for a commercial real estate building. Those are great options for you. That 40-year term is amazing. Luis, can you tell me what other
Yes,
cities I'm missing?
yes. I had the opportunity to have experience with this kind of loan, and it took about 3 months. It's a little long process to be approved, but once that you approved, it's really amazing for the borrower. And I'm going to give you guys an example so it will be more clear to understand how this works. Let's imagine that the buyer is going to acquire a building, whether it's multifamily, warehouse, a school of barbery, or what have you, but it's a building with a business, without the business, doesn't matter. And it's $1 million, okay? So you can go SBA, which except for multifamily will be 10%. Let's say it's a warehouse, 10%. So that's 900,000 balance, correct? Out of the 900,000 balance, this program will cover up to the 33% of that 900,000, which in rough numbers is 280 to 300,000. Okay, so now the balance is 600, correct? The bank will loan you 600 in whatever terms you can negotiate with them, whether it's 5, 10, 15, 20, etc., with fixed rate according to the bank guidelines. But what happened to the $300,000? Well, if you qualify and you are approved by this program, you have $300,000 flying in the air, and you pay zero, nada, for 40 years. But there is some conditions, of course. The building, in this case example, that is a warehouse, it has no material changes. You cannot convert or transform the warehouse into a restaurant or a restaurant into an office, for instance. You cannot have issues with taxes. Of course, property taxes is very important. You cannot have unsolved city zoning. If it has been approved for a warehouse, again, you cannot make an office building or a gymnasium. And also, you cannot have any default of the loan, meaning the 600,000 or whatever other loans that you might have for equipment, etc. Also, you have to have a subordinate mortgage or a position with the other collateral. If you do not sell the business in 40 years, the $300,000, guess what, guys, is forgiven. You do not pay them. So that's the beauty of this program. I had the opportunity to have a transaction with this program, and the buyer was extremely happy because in my case it was only like a 250,000. But hey, if you don't pay 250,000, that's a good deal. So yes, it's a very, very nice program. Also, I don't know, Natalie, if you want to interject with these other associations or nonprofits. I have some experience, especially with NDC and with MCCD. I have had made some transactions with both, and especially the last one was with NDC, the Neighborhood Development Center, and these guys offered them a 6%, 7%, excuse me, down payment. They gave a grace period of 5 months, meaning the buyer did not pay for 5 months, then 3 years of interest only, and then you start to pay interest at the market rate, of course, at the time, not today, for 10 years. That was the terms of that loan. And also, for the icing of the cake, they granted or gave away or gave $25,000 for free to the buyer, which that was for equipment, conditioning, repairs, etc., etc. And then the buyer has to prove that that money was used for those items. So that really worked very, very nice. Another experience that I have had is with the MCCD program. That again gave a $50,000 grant to the buyer and 5 months grace period, which means the buyer did not pay for 5 months and then started to pay for a fixed term of a fixed rate for 10 years. So that was what we got for the buyer. And again, as Natalie has been saying over and over again, every business is different, every application is different, and every timing is different, every industry is different, and depending upon the time of the cycle you are in, obviously will be different. It's not the same to have a business that is new and is just starting, that if you want to buy another warehouse and you have had already 2 or 3 warehouses and you have 5, 10 years experience in that particular industry or business. So that's basically, Natalie, what I have for today. And also, I have a question for you, Natalie. You were mentioning the underwriter. I would like if you please explain to us a little bit about what are his or her functions, what he does, what is the objective of the underwriter, or to have an underwriter to us, so we have a clear understanding about that. Please.
Yep. So I will take over the screen now here and share. All right, can I get the share back here?
I think Luis has to stop sharing, and then you will be able to.
There.
Now try again, Natalie.
Okay, perfect. Now you can see my screen bigger now.
Yeah, it's perfect.
Yes.
Perfect. All right, so we went over the debt and what is underwriting is kind of what we're looking at now. And what the job of an underwriter is. The job of an underwriter is to mitigate the risk to the bank. So what risk does the bank have by lending this business money? So again, we look at liquidity of the personal borrower. We look at loan to value of the bank. What assets are going to be sold? What can the bank take and resell to get back? So the underwriter is really there to make sure that the bank risk is low by borrowing you money. Have you ever borrowed anyone in your family money and you were kind of like, oh, I hope I get that back? Well, that's what the underwriter is going to say to, us as the bankers. As the banker goes through, and our job is to structure the loan correctly, make sure we understand the business, make sure we understand the business's operating cycle. When does the business get paid? That way we can establish what the business can have for repayment terms. So loan structuring and covenants. What are loan covenants? So that was one thing that I wanted to talk about because that leads into what happens when a business falls apart, right? We talk about covenants as maybe you have to supply your banker with annual financials. The bank will then make sure your business is performing to repay that loan. So sometimes we've seen it where the bank freezes their line of credit. Well, what does that mean? Why is the bank freezing my line of credit? Well, maybe there was a covenant in your loan agreement that you were supposed to provide a monthly borrowing base, and the business owner didn't understand that. And so I never received a borrowing base from my client. So underwriters, they mitigate the risk and say, okay, we don't know how this business is performing. We need to freeze their line of credit to make sure we understand the business can make those repayments to the bank if possible. So that is the essential role of an underwriter, is to make sure that the business is protected and the bank is protected. We want to make sure we're not doing anything to harm that business and putting covenants on that business that it's not obtainable. And that's really why you need to understand your loan agreements. Number one, look through your term. Number two, look to see the purpose of the loan and make sure you're in the correct product. And number three, always understand the covenants that are put in place in that loan agreement. I have clients that provide me with quarterly financials. I have clients that provide me with monthly financials. It just depends on the type of industry and how that business gets paid, where the bank wants to either monitor to make sure we're going to be getting repaid. And that's really what the underwriter will look at to mitigate those risks is, okay, what do we need to do to make sure that the bank is getting repaid and the business is successful? And we're working together to make sure both of those are happening. And to bring back the question of what happens when I get deported, there are things that you can do to protect yourself. I have had the pleasure of working with Siler Law in the past. I did put that contact information in there. If you have a good attorney, please make sure that you are speaking with attorney on your business ownership structure, if that is a concern to you. Just because you're a signer on a business account does not mean if something were to happen, if a business owner passes away or if a business owner is deported, that does not mean that that signer has access to those business funds. It depends on ownership and how the business agreements are written, and the only person that can do that is your legal counsel. So make sure that if those are any concerns to you, that you contact an attorney, and make sure your personal and your business assets are protected from anything that can go wrong in the future. That's huge for you guys to be proactive about, and making sure that you're going to be safe. I haven't seen any questions come up in the notes. Does anyone have any questions at this time that you'd like me to address on anything that I have gone over today? I know that was a lot of information. If you think of anything, my contact information is here that I will provide to you guys in this slide deck. Please feel free to reach out to me. I can point you in the right direction at any time.
Okay, Natalie, thank you. So anybody that wants to make it, ask a question, please those go ahead and do it and use the chat bottom at the end of your screen. Thank you, Natalie. It's been great. All this
You
information
guys.
really prepare business owners in search of some financial support. Especially with banks. I think all the information you provided here has helped us a lot. And the idea is just to be ready before you go to the bank. Be ready with all these tools and information, and be prepared. That's the intention of this series of webinars, making sure our business owners are prepared. And I do have a question, Natalie, because we touched on this very important subject of immigration, which is very relevant nowadays. And we talked about a little bit about what do you need to do if you get deported. But before that piece, do bankers and underwriters look at immigration status of business owners to be able to provide a loan?
So previously, we did not look at citizenship. With the new changes in our webinar that's going to be coming out later this year, the SBA has now required, as of June 1st, that we provide proof of citizenship for any lending moving forward with the SBA. Now, if you are looking at a traditional loan, we do not look at those items. Of course, we always collect driver's license and identification so we can identify you. We also look at, social security numbers, because our system cannot operate without one, right? So the interesting thing is the changes that came down through with the SBA as of June 1st of 2025. And that is the only spot that we're looking to require proof of citizenship.
Yeah. So if you're requesting
Natalie,
any other
go
type of
ahead.
loans that is not SBA backed, then you're not asking for any of that stuff. Okay,
No.
good. Go ahead,
I
Luis.
have a question, Natalie. You said you require a social security so the system can work. My question is, what about if I do not have a social security number, but I have an IT number? That works
Will work
also?
as well. Mhm. Yep, that will work as well. An
Okay.
ITIN. Mhm.
All right. I don't see any more questions. I think our time is we are on time to finish our webinar. Thank you so much, Natalie, for your input, and
Thank you, everyone.
we look forward to partner with you again in the future for future webinars. This information has been it is very valuable. Thank you, Luis, too, to participate with us like always. Go ahead, Luis. Yeah, you are muted, Luis.
I'm sorry. I
Yeah.
just want to mention again that the next webinar is going to be SBA, and Natalie is going to also help us with that presentation.
Yes. Perfect. I'm glad. So have a great day, everybody. Please keep an eye on our calendar for the next webinar on this series. And we also have a couple of other different series with different business operating and financing topics. So take a look at that and join us on our webinars as you feel that the information is right for your own business. Thank you so much and have a great day.
Thank you. Bye.
Thank you very much. Thank you,
Bye.
Natalie.